Hey everybody, finally got the stream to go. I was taking an extra few minutes to make sure I had the CPI information correct for you instead of just showing a bunch of stuff. I wanted to get the good juice, and I want to talk about the potential quantitative tightening ending next week. CPI this morning, just reinforcing the topic that I already planned to talk about this morning. So welcome to the show. We got Hugh, Dawn, Lieutenant Colonel Goose, Gaten, Rob, Ivan, Diane, Dan, Scott, David, Arturo, Mad, Ed, Craig, Terry, Serge, Alan, Al, B, Ted, Mary, Will, David Skaggs, Darren, Andrew, Marianne, and all the channel subscribers like Douglas, K, Jason, Terrence, Garneau, Pauline, Laura, Mark, Catherine. Good to see everybody. Jan. Thanks for being here. Thanks for being part of the group. Thanks for supporting me, my family on this whole adventure. You know, it does take a community to keep this thing going. So I appreciate everybody being here, being a part. So welcome to the market, October 24th, 2025. We've got another fascinating paradox. Just when you thought you had everything down, we're going all-time highs, the party's going to continue. Well, think back. Just a week or so ago, the sky was falling. Ugliest red candles that we've seen this year, at least since Liberation Day. And the fun stuff, crypto, momentum stocks, they were a big bloodbath going whee as they fell through the sky or through your portfolio. Anyway, it looked like the liquidity drain the Fed has been engineering the past 2 years, what they call quantitative tightening or QT, was finally starting to take a bite, maybe kind of hard. And then poof, the dip buyers, God bless the optimistic souls, they stormed back in, waving their wallets and shouting, "Buy the dip, BTFD." Just took a little whisper that President Trump and Xi might be able to set up a meeting next Thursday. Suddenly, all is forgiven. The S&P back over 6,700, up 15% for the year. The Nasdaq, not to be outdone, about to crack 19% for the year. But here's the thing. While the market is throwing a party, the plumbing underneath is groaning. The engine room of the financial system, we've got warning lights everywhere. The bank reserves have plunged below the magic $3 trillion number. That's a big deal. The Fed's emergency piggy bank, the reverse repo facility, which held over $2 trillion at its peak, is basically empty. The cookie jar is bare. Think of it like this. The Fed has been on a diet. QT, trying to slim down its massive $6.6 trillion balance sheet for 2 years. Excuse me. Felt like something went my eye there. And it's been letting its bonds mature, sucking cash out of the system. The idea, fight inflation. Simple enough, right? How's that going in reality? Not so good. But now, the diet. Well, the person eating the food started to look a little pale. That's the U.S. economy. The system getting a little shaky. We're seeing emergency draws on the Fed's lending window. $6.6 billion the other day. The overnight lending rates, the rates that the banks charge each other for cash, we're seeing spikes. It's got a real September 2019 vibe to it. And if you remember the repo apocalypse, that wasn't a very good thing. We're getting I'm sitting here reminiscing about, like, I see things lining up from the 70s. I wasn't around for it, but I've read about it, study what the market did back then, see similarities to things that were said and things that happened back then. I see a lot of similarities to the dot-com bust that I lived through. I see a lot of similarities to the great financial crisis that I lived and traded through. I lived and traded through the dot-com bust. I see a lot of similarities to the September 2019 Rico-apocalypse or Vix-mageddon or whatever you want to call it. And these aren't good things. The Fed definitely remembers the Rico-apocalypse. They don't really want a sequel. So what happens when everything starts to feel faint, right? We got to raid the fridge. And that's exactly what the market is betting on. All of a sudden, big Wall Street banks, the Goldmans, the JP Morgans of the world, they suddenly had a revelation. They've all just tripped over each other to announce that the Fed's going to end the diet, like next week. Goldman and JP Morgan both putting out reports yesterday, or maybe this week. And that FOMC meeting coming up next week. Next Wednesday, we'll get the results. They start meeting on Tuesday. They end up on Wednesday. And we find out. It's kind of funny, though, because just a few weeks back, they were saying, December, maybe we roll into Q1 next year. And it's almost as if they all read the same blog post. JP Morgan even put out a note titled, I'm not making this up, "When the facts change, I change my mind." That was literally the title. It might be a more honest title than, what might have been. That we finally noticed the flashing red lights, and everybody out, all the financial pundits have been pointing to for months, like this guy. Anyway, so the big story here, QT party probably over. The Fed is about to flip the switch, but here's the sarcastic twist for you. An article on MarketWatch pointed out that a hilarious fact of the matter, over the last 2 decades, stocks have actually performed better during QT than during quantitative easing, QE. When the Fed is printing money, stocks do worse. I know, that makes no sense. But the data has been pretty clear, and the data is data. So what does that mean for us? Well, the end of QT and the potential start of a new round of QE is like opening the floodgates of liquidity. And when that happens, certain assets tend to do very, very well. We're talking about high beta, high growth type of stuff, tech stocks that have been leading the charge, the small cap companies that need cheap credit to grow, and yes, the world of crypto. Bitcoin's already sniffing around 110, 111,000. What happens when the real money's actually turned back on? Last week's sell-off, kind of a preview though. The speculative assets got hit, and hit hard. When liquidity took a hiccup, it started to be the reason that they were the first to fly. When the liquidity fire hose got turned back on. So as you're looking at your portfolio, you might want to ask yourself if you have enough exposure to things that might thrive on easy money. Of course, there's no guarantees here. We have a Trump Xi meeting coming up on Thursday after the Fed on Wednesday. This is a whole nother can of worms, and we could always have a surprise next Wednesday. But the writing on the wall seems to be fairly clear. The Fed is probably a little bit nervous about what might be about to happen. We might break the funding markets. And I think they're about to potentially pivot. And the question is, though, are you prepared for it? So the CPI came out this morning, and, well, what a time to be alive. The U.S. government has been closed for 24 days now. They can't seem to agree on how to spend the money, but they did manage to open up a tiny crack in the data. How special. They called back a few economists from their forced vacations and dusted off the calculators, gave us the one, the only September CPI print. That's right, because while Congress can't figure out a budget, they sure as heck can't figure out what to do with Social Security or healthcare or any of that stuff. I mean, priorities, people, priorities. Let's take care of the business that we actually elected you for. But guess what? CPI came in, drum roll, please, 3% year-over-year inflation, 3%. The highest we have seen since January. And the markets, hey, we got a big pop. We're rallying. Party on, Wayne. Party on, Garth. You heard that right. Stock futures soaring. The VIX, well, taking a nosedive as kind of expected. Gold, the classic safe haven, got whacked again. And Wall Street party on. Now, you might be thinking, wait a minute, 3% inflation? How is that good news? The Fed's target is 2%. And we haven't seen 2% since 2021. At least, if you believe their numbers. That's over 4.5 years ago we're talking about. Since we saw 2%. And we're celebrating being 50% above the target. Welcome to the upside down world of 2025. You see, experts, I use that term kind of loosely. We're expecting things to be even worse. They're expecting 3.1, maybe 3.2, because we only got 3. Popping champagne, baby. It's like getting a D- on your test that you were sure you were going to fail. And now you're a genius. Because, hey, you passed the test. Barely. But here's the story. Nobody's telling you. The headline's not going to hit this morning. This isn't just about one little number. This is about a government in chaos, a trade war that nobody seems to be winning, and a job market that, well, starting to look a little fragile, especially as we lose more and more jobs to AI. So let's start with the shutdown. It's not just about national parks being closed and a bunch of bureaucrats getting a paid vacation, at least when they get back and Congress settles up with everybody. It's costing the economy an estimated 0.1 to 0.2% of GDP every single week, and it's forcing the Federal Reserve to fly blind. And they're about to make that huge decision next week. So, doing it with a potential blindfold on. What could possibly go wrong here? Then the tariffs, well, supposed to make America great again. They're costing businesses in the United States an estimated $1.2 trillion this year alone by the end of the year. And guess who's paying for it? We are. Everything we buy has a little sticker on it made in some other country. Whether it's apparel, durable goods, TVs, other electronics, phones. As President Trump is threatening to slap 100% tariffs on Chinese-made goods starting next month. But with the Xi meeting coming up on Thursday, we'll see what happens. And finally, there's the job market. They tell you that unemployment is low, but if you dig a little deeper, you find that, well, we're kind of in something called a low hire, low fire economy. Companies aren't hiring, but they're not firing. Everyone's just stuck, job hugging, they call it, clinging on to dear life of their job because they're scared of what potentially might come next. I mean, what does this all mean for you, the savvy investor? It means opportunity, because in the midst of all this chaos, the Federal Reserve is about to give us a gift. They're going to cut interest rates again. With inflation at 3%, we're going to cut rates because what could possibly go wrong? Because we're more scared of a recession and losing jobs than they are of inflation right now. They're looking at a weak job market, the government shutdown, the trade war, and they're saying, we need to goose this baby a little bit. Need to push the gas. Print some more money. Make it cheaper to borrow. So how does this all play out? First off, small cap stocks. The Russell 2000 already outperforming this morning and, well, heading toward that 2,600 target. Plus, many of these are trading at huge discounts to large cap stocks right now. Second, real estate investment trusts, especially the ones that are less sensitive to the economic super cycle. And I mean, think about it like this. Data centers, telecom infrastructure, healthcare, real estate investment trusts, they're the landlords of the new economy. They have long-term leases. They benefit from lower borrowing costs. Plus, they pay you a nice dividend while you wait for the rest of the market to figure out what the fudge is going to happen. Third, growth tech stocks. These companies are about future earnings. And when you lower interest rates, future earnings are worth more today. It's kind of basic math of the stock market. So, innovators, disruptors, the companies that potentially are going to change the world should get a nice tailwind here. So that's the CPI for today. Everybody, hope you enjoyed it. Hope you enjoyed it. That's a little double dose of monologue there for you today. I didn't expect the CPI to actually come out, quite honestly. So I didn't even focus on it. So anyway, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. I make predictions. They may or may not come true. Be a bummer, but that's the way it is. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. If you need somebody to tell you what to do, hire and consult a financial advisor. Year to date, here's my profits. Up to 29, and breaking through 29,000 year to date, baby. Love it. Just keep just keep pushing it up a little bit. Be above 30 before you know it. So if you want to follow along, links in the description on K-Info, all publicly posted stuff right there. Boom. Shakalaka. If you want to see the actual trades as I place them, the only place I post that is in Turnmeyer Trading Labs. So it's like a lot of stuff ripping and dipping today. Let's dig through some of my alerts, see what happened. SPY above. Yeah, SPY getting up there, almost to 6,800. More alerts. Love it. Snow alert. Let's see what we got on snow. Right up to the target zone. Oh, I need to turn off Apollo. Oh yeah, 250 and 259 coming up on that. I have my alert just set under it. Let's set another one above it. I'm gonna have to go look at some of these. Let's see what else fired off. Snow. And yeah, ES was crossing. Yeah, that's what on the pop there. Looks pretty spicy, everybody. Extra spicy, crispy, delicious. So let's dive in, take a look. Oh, guess what? Be hornswoggled. Well, I mean, hit that target. Yesterday I was like wondering if we were going to do it, but there we are. That's the next one. We stay on the path that I thought we might be on. Then we might do this one. So watch out for this for another, next week could be, so we could float along here and then take a sudden dip and then head back up here. And then watch out what happens in November. Boy, the alerts are flying thick and heavy today. Man, I don't even know what to say. I mean, am I lucky or am I that good? Yeah, I mean, jeez, man. I don't know. Let's start a poll. Let's see. All right, here you go. I figured out how to change the poll instead of just yes or no. Am I lucky, good, or who knows? Let me know. Dang. I mean, that's crazy. Lucky. That was luck. I mean, I feel like a luck. Sometimes I get lucky on these. Jeez, man. That honestly, I'm kind of shocked that I get these moments once every 2-3 weeks where I don't even know what to say about that. Like, I thought that's what we would do, but I wasn't very confident in it, and I think that's what's happening next. But we could just rip on out. We could just keep on this train. So be careful. I'm thinking that we may do this. This is the range in here. These two blue lines. This was the range. We're almost in the middle. We may drift to the top of the range out to the 29th, FOMC day, and take a big spill. We could come down there because when a diagonal ends, we get that big. Another one of these is what I expect. So if you don't have a play on VIX, look at that, back down to 16. Holy nuts. If you don't have exposure to this, today might be a good day to pick some up. Let's look at a couple. I mean, certainly by next Tuesday or even by Wednesday morning. So VIX here, it's unique. Be careful here. I want to stress, I can't draw on this, but I want to stress these AM. I was talking about this, yesterday? When you see this little flag, and it looks different on different platforms, but when you see these expirations that are AM, they stop trading the day before. Like, you can't trade it, but the price that it settles at is the next day, kind of, but not really. Like, it's a calculated thing that you don't actually even know until after the contract expires, or like you can't trade it anymore. So it's tricky. So you want to be out of these. Now, the monthlies are the better place to play liquidity wise. There'll probably be a ton of people playing in these weeklies, but the monthlies are the place where if you need to get out, that's the place you can do it. Now, coming in here and looking, we're at 16. Previously, we spiked to 30. But that doesn't mean you can get out. It doesn't mean that VIX is going to spike while the market's open. But look at some people playing up in here. 50 cents. That's an interesting place to play. Now, you come in here and do a call spread. You buy one here, sell one up here, potentially make the money. But the funny thing is, look at how the prices don't really drop. So if you do a call spread, you see how the prices stay pretty stacked all the way up in here, all the way up to crazy levels. When you do a debit spread, unless you're right at expiration, there's always going to be some sort of premium baked in. So even though you might do a, like 5 wide spread, your max profit may realistically only be like half of the 5. So even though this looks like a 10xer, risk 50 cents, make potentially $5 out of it. In reality, you may only be able to get like a 5xer out of this. You may only be able to get $2.50, or maybe even only $2, 4x, 5x instead of a 10x. And if you don't quite understand what I'm even talking about on the, let me log into this other platform where I can draw it. You can buy UVX shares. Just be aware, though, there's going to be decay. I have a spread on UVXY because UVXY is not pricing in a big move. And let me load up this platform. Trying to grab. Oh, cool. I love it when the windows jump around and don't go where I expect them to go. Okay. VIX. And trading, there we go. Pull this over. So we're looking down here at VIX out November. If we were to do something like a 20, they're not even letting me. Prices aren't live yet, but if we did like a 20, 25, roughly, this account has delayed data. I don't trade in it enough to. That's cool. It won't even load it up. We'll have to come back to that idea here in a minute. I think it's 15 minutes delayed. And so that's cool. This one will do it, but it's like, to me, it's not as clear on how this works, how you make money here. It doesn't graph it out to me the right way to really show you the risk. So if we got a pop, potentially make money. It shows the probability curve in here. The probability you're going to get to there, kind of low. But see what happens. See what happens. So when that other one finally populates, I'll bring it back over. Let's see. Oh, it might have come alive just now. Let's see if we can do it now. Buy a call, sell a put. All right, sell a call. November 25. There we go. Snapshot analysis. Up. Can't do it. Can't get the data. God, love it. So you could go to UVXY. The problem here, though, is it's very suppressed, and it's dropping out like a banshee here, down 3%. So, now, really, you could come in here and just pick up maybe. Golly, those are still pricey. You want to get closer to the money. Maybe something up here. Still expensive. Crazy. See, this is your. Did I buy, sell? That's what I meant to do. There we go. Looks better now. 43 cents. We do limit the profit, but you can see the curve over here. Shift it. Pan right. Cool. Zoom out. Let's just do this. And that over. Can you hide that, please? No? Cool. This works a lot better on the big screen. This all jammed up in here. We have a kind of a spectral analysis thing down here. It shows you like what happens, like if price goes higher, how do we make money? And you need a, initially you need a pretty big move to make money up here. As you get to the end, you can get in the money pretty quick, but you got to get through your strikes. Like I said, that was like a 10x'er, but any reasonable time frame here, you might only be able to get 2 or 3x. On any normal pop out like next week. Even a pop to 14 would only pay you 300%. Now look at the UVXY. Let's pull all these over. UVXY. See, a pop to 14 would be back to the high. Remember, this thing decays, and we're down here. So we need a pretty big move. That'd be 40%. 40% on this one. VIX would need 20%. So if it responded properly, but it's probably not going to, because look at this move. That went from here to, that was a 75% move on VIX, right? That should be like a 150% move on this if it played out properly. But what did we end up getting? 35%. So it actually, instead of being a 2x ultra, it was more like a half x. So right now, UVIX is not paying properly in the short term. So anyway, yeah. I guess few people think I'm lucky. Yeah, 30% lucky, or who knows. So anyway, let's see. Do we rally into the FOMC next Wednesday? Yes or no? So right now, UVIX kind of broken. VIXY, did that one respond properly? No, it was even worse. Even worse than playing VIX directly. So this is one of those difficult kind of things, is that how do you play? How do you play? Right now, VIX itself is the thing that's pricing in the ability to move. Now it's not even like coming up. I love it. Go back to the quotes. There we go. Get stuck in. So I was talking about a 20, 25, maybe. Maybe we'll go higher. So yeah, right now you risk. Yeah, it's not showing it. That's so goofy. This tool not showing it. But right now that's a 10, almost a 10x. I guess 8.5x right now, potential at 54. Now you could go up even higher. Now that's closer to a 10x right there. This is better than a 10x. Risk 65 to make 7 potentially. 70 to make 8. That's getting even better. 75 to make 9. So we're talking about 9, or it'd be 8.25. 8 divided by 0.75. It's 11 to 1. And 29 is basically where it was before. But if things got extra crazy, it could go even higher. So it's kind of interesting. If you're just going to buy a long call, maybe VIX is the best place to play, because even though UVIX is supposed to be leveraged, it's not. It didn't move last time, so there's some sort of other issue going on, and it's kind of, I don't know. I don't know what you say about it, right? Like, it's just showing that it's not working right, and those are not available in the US. 2.25x. Short VIX. So let's look at short VIX, SVXY. Let's see what it did. SVXY. So short VIX did a dive here. And it only went down 11% on that move. So VIX itself did 75%. This one did 11%. UVXY did 35, and VIXY did 23. So right now, these alternate VIX instruments aren't paying properly. And Skaggs, you had asked me about this before, so. Hey, General Rush, good to see you, sir. Good morning. Now, be careful. That's a Head and Shoulders in here. And if that plays out, might see this popping up here. So they're all sell the news. It's all buy the rumor, sell the news. So that's, the common market adage. It might be, sell because of FOMC. It might be sell in front of FOMC. It might be sell the day after FOMC. I don't know. I'm just speculating that this chart hit the target and we're cooked, with the potential to come down here, find support one more time, and then go up here. And it's just the chart pattern. And that was 3 up with a 3, 3, 3, 3, 3, and then bigger down probably. Now it's possible that this one takes us right up to here. I expect us to do some sort of down here. I don't think this is the big broken market down yet. I think we're going to take a trip back down. Is it because of the excuse China tariffs? Meeting with Xi here. We got the FOMC here. We got the meeting with Xi here. We got the potential 100% tariffs here. That news was the reason, supposedly the reason for that. I think it's just a fragile market and market fragility. And we look at where the daily roadmap line is, and we need to go visit it probably. Now, we don't have to, but we sure could use a visit. April's last time we visited. It was August before that. It's about time to take another trip down. Let's be careful out there, everybody. And Russell probably going to crank it on up to 2,600. That's what we've been looking for. Once we kind of confirmed above this level, I said that was where we're heading. Just a matter of time frame. Oil still messing around in here. I did expect that little pop, and as long as we're staying under here, probably going back down. If we get above that, we're coming up at least into this area, if not into that. So it's got a kind of an area right there that we'll probably retest if we pop above that. As long as we stay under that, net result still down. Gold shopping in here. Probably gonna make another leg lower. Be careful. Doesn't have to go higher. In fact, it needs a retrace so it can go higher. Bitcoin. So here's what we've got. Got this high. Got this low in place. We've got this high right here. We've got this retrace to a 618. And if we can turn it and burn it higher, we need to get up to 124 on the next move. Turn down here, get the next move higher, break out new all-time high, 133 area, 130, 133. So it looks like this. If we're going to go higher, then we may retrace to here and then go on for the finality of this Bitcoin blow off move. We'll see what happens. Let's draw a few bubbles here. This is kind of the roadmap I expect right now, but you know, Bitcoin, we'll see. It has to get bullish. It has to break above that level to even kick this off. So if we glance off of that, it's a problem. So there you go. That's a very important level right there, right around that 113, 114 level. Get on up above 113.5. Like we're probably going on up again. Ether doesn't give us any clarity either. Got the move up, got the retrace, and we're waiting. Waiting. We've got, that's a move up, a retrace, a move up, a retrace. It's nested up. That one was deep. There's the resistance. If it pops up to here, 44.50 area, retrace this area again, hold, and then break back out above that, we're probably going to cruise right on through this resistance area up here. May go quickly even, and we could be on the upside here at 66,000. So in the short term, we're looking for Ethereum to break through that downtrend highs, back test it somewhere over here. So we're looking for it to pop through, back test, and if it does that setup, we may do that right there pretty darn quickly. Why? I don't know. Doesn't matter. The why doesn't matter. That's when you can decouple the why from trading, you can trade with much more clarity. And it looks like the low liquidity party continue on. Party on Wayne, party on Garth. 53 is the next target up here. We scraped the bottom of the target. Kind of paused here for a few days, but up in here. That's where I expected. And if we go cruising even higher, it'll be up here almost 60,000. This is what I use as a big picture global liquidity indicator, maybe even 61,000. So that'll be this will be the stretch goal up here. Dollar. I do think it's funny, so. Yeah, it looks like most everybody thinks we're going to rally on into the FOMC. Let's start another poll. Let's see. You feel more confident and don't need my guidance when we open green? Just curious. It seems that my views are higher when we open red, or it seems to be kind of chaotic in the market. It looks like today views are down. Market's green. Dollar just hanging here. All the things I said yesterday still apply. We hold here, break down, we're going lower, push up, back test, probably going higher. Only 45 votes on the last one. All right. Apple dumpling popped up here and just paused. We did tip the odds we're going on up, but maybe we don't. Maybe it's just a fake out when we drop back down. So watch out for the uptrend of lows here. Support right there at the uptrend of lows, wherever it is. There's this line right here. That's the support line right now. Trend lines are the weakest form of technical analysis, so be careful. Amazon, as long as we stay below the trend line, down is the pressure. We can break above. Then we got the 618. And then we can come up here and possibly get up to 257. Google, almost to 263. Almost to the target, $2. Then what happens? Be careful with what happens. Could we push on higher? Possible. It's a long way up to the next fib line. In fact, I should just change that out with the current one. I've kind of changed my fib settings just a little bit. Yeah, 302 would be the next area. You see how this struggled in here. 302 is that next level up there. Let's make sure this is on the actual levels. There we go. Closer, 304. So we're about to hit that fib target. And meta. If we can get above that, 753, cruising on up. But be careful. If we don't, 830, 839 is the target. If we break above that 753, that was a 3-wave retrace into the roadmap line. Breaking back above here sets us up for 812, 827, 839. That'd be a fib ladder of resistance right there. Microsoft still set for. I played a long-term play. Well, long-term out to December, looking for this move back down here. Working on the 1, 2, 3, 4, 5. We'll see if it breaks above. Let's say above 535. I'll consider just bailing on that. Nvidia, crushing. There's nothing. Tesla, nothing. Man, the call buying is ridiculous here. That dip yesterday, people bought the freak out of this thing, winding it up for a pop. I'm long. Just throwing that out there. Netflix cruising on down, probably going to come down to 1050. And I go pull all the gainers. There were a lot of gainers today. A lot. And since we're running kind of long here, let's go hit the setups. Go through these really quickly. These are set up for potential entry today on a daily chart. This is my signature roadmap pattern. makes a high, makes a low at the roadmap line, bounces, gets a close above the 618, target 47.52. ASC, much more clean than the last one there. As far as the price action goes, there's the breakthrough, retest. This is a trend, pullback, continuation system, 1384 potential. Not much historical data on that one. Last bounce, you can see they reject almost perfectly at the... I've tuned this thing a lot. So there's the move up, 27 potential targets. That, look at the numbers on here, 25. Not statistically significant, but 5 trades is not going to wreck this. 80% profitable, 5 profit factor. This thing tends to work out. And BFH. Here's that one. Another one that looks pretty darn good. 70 on the target. I cannot say I've ever heard of this. Bread Financial. CAF. And we did talk about this one before, and it hit the targets. Here we are again. A couple months later. Another potential bounce. And target at 45. Charlie Bravo. Here's a potential high. Here's a potential low. There's the potential in 293. CNO. The algorithm's still in it from the bigger bounce back here. This one, 4098 targets. Dorm. Here's the high. Here's the low. Entry, 170, 150. Pretty darn fair. A lot of these have really good numbers today. This one in it from the last bounce right there. Bouncing again off of that high, that low. Smaller target. 46. And yeah, 40, 46. EMR. A little baby bounce in there. It's in it from the bigger bounce, but this one, 137. EQNR. If anybody's finding this helpful, beneficial, let me know in the chat. If you don't like this, we don't have to do it anymore. 26 target. EVCM. A lot of people said they just want to know the setups. So here's all the setups, going through them. 1247. FNDA. Didn't hit. Skip. Pass. Hasbro. High, low. 84 is the target. 36, 75, 1.1. Just a real standard, normal. And let's see. For those of you still left. There you go. Start the poll. Do you like them? Yes or no? You will like me going through each one of them. That's the big question. So we've got this high, this low, a 59.93 potential, 20.70, 1.2, just a real standard. So it's like Mastercraft. We talked about that before. Basically based here in Vonore, just down the road. Target up there, 24.56. NE is the wrong ticker. NE, we need that one. Here's the high, here's the low, there's the entry, 33 target. There. PKG. Clear that off. Grab the fib tool. Here's the high. Here's the low. There's the entry. 222.76. And that one's a little weaker on the stats right there. Here's the high. Here's the low. 14.50 on the target. No real stats. That one, let's see. Did we actually hit? We missed actually touching. Pass. Ranger. I use a tool that tries to find these in Python, and the Python data different than the TradingView data. So 15 target. That one weak on the statistics. RRX stopped out on the last one. The algorithm didn't trigger here, but 155 would be if you're doing it manually, and it does lose, so I'd probably not even touch it. Loses more than it wins. This is in it from back here on this other bounce, but we have this new bounce. I don't like the downtrend here, period, but that doesn't negate that from working at 38 right there. And 42.83. It's not a bad ticker like that. Those are good numbers, but that's a downtrend, and I just don't like it. TCBI, the country's best frozen, I don't know, Texas Capital Bank shares. So we've got the high here, the low here, and 89.43 with marginal numbers. TS, I would use that high, almost about to fire off in 39. TXG, I know what it actually picked on the algorithm because I created the algorithm, but creating an algorithm that takes into consideration every single possible case is very difficult. So 15, 53. And when you take into consideration every single thing, you introduce all these weird anomalies into it. And I just went for simplicity. That one didn't actually hit. WD, probably almost to the target here. Just a tick or two away from hitting the target, 90. And WES is the wrong one. I need the New York listed one. Ugh, I don't like that chop, sideways chop, hot mess stuff. 40.35, 11.63. Bad statistics too. All right, everybody. Looks like we're gonna have a big kind of grind higher day. Now be careful. We did hit the target. We don't have to drift into FOMC. We could just start this now. This could start today, it could start later. So be careful right there. Be careful. Looks like mostly people liked it. Yes, we had only 30 people voting, 34. A couple people didn't like the daily setups. I apologize. Sorry. Do let me know what you do like. So it's not, I mean, this doesn't have to happen. It just is the most likely thing to happen. I probably give it 75 and 25 are just going higher. Maybe 70-30. Am I trading for it? No, not really. Not until we start breaking down, because we can come up to the top of the range. This can grind up to the top before we actually start down. So I'm a trend pullback continuation trader, so I don't trade for the pullbacks. I wait for the pullbacks. So when we get the pullback and we hold support and we indicate we're going higher again, I get back in the trend. You don't have to catch every move. In fact, did you catch every move? If you didn't, quit trying. Just wait for the high probability setups. Patience and discipline. It's the hardest freaking thing to do, but important. Your account counts on you. Your retirement counts on you. If you never thought about it that way, like, nobody's watching out for your money more than you are. And if you're not watching out for it, if you have a careless disregard, well, it's going to go find a new home. Be careful out there. Have a great day. See you later. I'll be back Monday.